Hello, Southwest Florida homeowners and homebuyers. Welcome to the 239 Real Estate Roundtable podcast, your go-to source for navigating the vibrant real estate landscape of our beautiful region. I'm your host, Kevin Tremmel, a local real estate agent, leader, and investor here in Southwest Florida. On this podcast, we bring you insights from best in the business, top-notch real estate professionals, seasoned agents, and experts in everything from homeowners insurance to mortgages, maintenance, and repairs. Whether you're a first-time homebuyer or a seasoned homeowner, we've got you covered with tips, strategies, and valuable insights to make your journey in Southwest Florida's real estate market a breeze. Get ready to unlock the doors to successful home ownership. This is the 239 Real Estate Roundtable podcast, where we demystify the process, share insider knowledge, and ensure you're well equipped to make informed decisions. Let's dive in.
Hello, everybody. Welcome to another episode of the 239 Real Estate Roundtable podcast. Today, we are meeting with Vinny Sabatino with Aviscent Mortgage. Vinny has lived in Southwest Florida for 20 years, so he comes to us with a lot of local knowledge, and I can't wait to dive into our conversation about mortgage lending and financing. Welcome to the show, Vinny.
Thanks, Kevin, man. I appreciate you having me on, brother.
Awesome, man. Well, why don't we get started with the basics? Tell us a little bit about yourself. Where are you from? What got you into mortgage lending? How long have you been doing it? What do you like about it?
Gotcha. Well, the most important thing is who am I and why am I on this podcast? So I'll start in the very beginning, really, is I moved down here 20 years ago with my mom. She got engaged to an assistant golf professional in St. Louis, Missouri, and then he got a head golf position in Naples, Florida. So one day she asked me if I wanted to move from St. Louis to Florida, and I was absolutely on board. So came down here this summer before my senior year of high school, went to Naples High, and haven't left. Absolutely love our area, love the vibe, love the culture, love the weather, love the people, and it just got me hooked. And, you know, we'll always have a place here. Got a lot of friends, got some family here. So the ties in Naples are real. And, you know, didn't go the traditional college route. I went with the hospitality because in Naples, the hospitality and the restaurant industry is very big and it's very lucrative depending on where you go. So I actually ended my career at the Ritz-Carlton in Naples. I was bartending on the beach.
Gumbo
Limbo. Sunsets every night. I had regulars every day from all across the country. You know, you work there long enough, you start creating really good relationships, and relationships is one of my superpowers. I'm a connector, man. I just love people. I love talking to people. I love seeing how I can help people. And one of my regulars actually at the Gumbo Limbo and Sandbar introduced me to the mortgage realm. And I was always looking for an excuse to get out of the hospitality industry and go into another field. What it was didn't really matter. You know, that was my stepping stone to the next opportunity. So I always was open to opportunities, and I always let my customers know that when I was working at the Ritz. And I always had this one gentleman always come down every March with his family, had a great lifestyle, saw how he lived, liked him, had a good route. He was actually from St. Louis, ironically, too. And he showed me what he was doing, showed me the mortgage industry, and I was on board. I jumped on board 2016 and I haven't looked back.
Cool, man. Awesome. Tell us a little bit. Well, first of all, that seems to be how it's going. I was a bartender first as well when I first moved here. So, you know, I always said, like, Southwest Florida, you're either in real estate, you're either in hospitality, or you're either in like the medical field, right? Those are really like the big three things. So,
right.
But tell us a little bit about the mortgage company that you work for, like what makes them unique and what kind of drew you into joining them.
So I'm actually not with the original company with the gentleman that introduced me to the company. Actually, the reason why I left that company is because I was getting my butt whooped with interest rates, and I was new into the industry, and I really didn't know there was a broker side of mortgage lending. Mm-hmm. So I actually had one of my really good friends in real estate agent that I would do a lot of deals with. She told me that, you know, I wasn't able to get someone pre-approved, but this other person was able to get them pre-approved within 24 hours. And I was like, well, how did that happen? Because I didn't know. You don't know what you don't know, right? So she got in touch with me and she was like, listen, I love you, but you're going to make me cheat on you. You need to go talk to these people because I want you to be my guy that I bring all my clients to. and you need to find out what they're doing, because if you can't do it, I don't want to have to use them instead of you. So that day I booked a meeting with my current company owners, Frank and Marina, and they showed me what they were doing. They showed me how the products that they had available. They showed me how fast that they can get things done and how raw and low their rates can go, because where I was at currently was a traditional bank where, it's a W-2 employee, health insurance, retirement, all those things. But you have to realize when you're on the retail side of mortgage lending, you have expenses, right? Yeah. So those kind of get rolled into the interest rate a little bit, if you could say that. And I saw the light and I was like, man, I like speed. I like efficiency. And I also like lower rates for my clients, because at the end of the day, if you don't have a happy client, what do you got? You don't got anything.
Right.
So I jumped board. I went full on. And man, I'll tell you what, man, the floodgates just opened up with all those new products and everything that I had to offer. It was a whirlwind the last couple of years, and we're still doing very well. We're closing a lot of loans. We're closing, sometimes clear to closes in 4 to 20 days if they're regular conventional loans. And you couldn't do that on the other side. So it was a very simple and easy decision for me.
Yeah, cool. Awesome. Could you, because you're right, I feel like a lot of people don't know. I was in a similar situation. Like when I was working for a builder, we obviously had our in-house lender, right? And we would turn down loans for, various different reasons. And, 2 weeks later, like we would follow up with the client, and either A, he would have bought somewhere else with like a different lender,
right?
Or he would say, hey, can I buy a house with you now? I'm pre-approved with XYZ company, right?
Right.
But I was always under the impression for a long time, before I got into general, is like, well, isn't every lender supposed to be the same because of Freddie, Fannie guideline, this and that, right? What lender A sees should be the same, right? So like, could you kind of just shed some more light on that? Because I feel like a lot of people like really don't know, like, what's the difference between like, walking into your local bank and calling you as like a broker of loans and mortgages? Like what,
It's a great question, man. So let's use your example as the in-house builder lender. They have a box. They have a certain box of products that they can offer. Sometimes clients fit into that box. Sometimes clients don't. Most of the time, clients don't, whether they're self-employed. They don't show a lot of money on their tax returns. That in-house lender that you had at your builder, they probably couldn't do anything with that. So traditional retail have certain little boxes that they have to offer product-wise. Now, being a broker, you have multiple boxes with multiple products for multiple clients. So that same maybe self-employed borrower who has tax returns that, wrote all their expenses off. Well, we can do what's outside of the box, or non-traditional lending is, well, maybe we can just take a look at their bank statements and see what kind of deposits they're putting in per month, and we can create an income stream off of that alone. Or if they're buying an investment property, we have a no income verification investment property that buyers can put into their LLCs. We don't care what your tax returns are. We don't care what your W-2s are. We just care about if the property appraises and the property can cash flow more than the mortgage payment. That's another type of product. That in-house lender at your builder probably doesn't have a P&L, a profit and loss statement program. They probably don't have foreign nationals, people from Canada, people from Germany, people from all across the country or world that don't have established U.S. credit. We can do loans for those types of people too. So the difference between a retail lender and a broker is retail has a very small box. Yeah. Brokers have like a waffle. They have all those little boxes that we can put clients in. So that's the main difference. And traditionally, brokers can close fast. Like I'm talking fast. Depending on which lender you go to, underwriting is very quick, very efficient, and the rates are very competitive.
Yeah, cool. Yeah, thanks for explaining. I bought an investment property in 2024 with a DSCR loan, and I was like, what do you mean I can close in my LLC, right? Because all the other properties I bought were Freddie, Fannie conventional, and it's like, yeah, no way. So
now you can close Fannie, Freddie in a trust,
right?
But you can't close it in an LLC. Right. So that's a really good real estate hack that not many people are aware of.
Yeah. I mean, it's after leaving the building world or like the builder world, like it's like, for me, it was like fireworks. I was like, oh my God, what do you mean you could do this and this? So it's
Yeah.
pretty much everything that you just explained, right? So it's cool. So what, there's a lot of talks about rates and, the Fed rate and when are interest rates finally coming down? Are they coming down? Like what, in your opinion, obviously nobody has a crystal ball, full disclaimer, but in 2025, what should buyers and sellers kind of expect when it comes to lending and rates and mortgages?
Well, let's start off with the elephant in the room. Everyone wants the lowest rate. Are rates going to come down in 2025? I have a feeling they're probably going to be pretty steady to where they are now, high sixes, low sevens. That's just my prediction. I'm not really seeing any indicators that we're going to see 3 or 4% again in our lifetime. But I think the new norm for just 2025 alone will probably be mid sixes to, low sevens. So that's my prediction. And again, like you said, no one's got a crystal ball, man. So in 2025, let's talk to sellers are still under the impression that they can get a certain amount of money that they could have got in 2021. So if you're a real estate agent or you're a seller, you have to basically bring your expectations down to the current times. If you're a buyer in this market, you also have to bring your expectations down a little bit that you're not going to get that 3%, 4% interest rate currently. Now, there is ways to get your rate a lot lower, which are mortgage hacks that I can certainly discuss with people if they give me a phone call and we can discuss it and I can do a loan consultation with them. I've been able to get people in a lot lower than we are currently. Let's just put it that way. But expectations, I think, are going to be a very big word in the 2025 market. We're recording this podcast on January 2025, and it just started. The year just started. Trump's going to be in office in 2 weeks. What's going to happen with that? We don't know, right? So it's all basically a waiting game. But in my personal and professional opinion, I feel like this moment in our time right now is such a fantastic time to buy because, rates are higher than what people might like, but a higher rate environment is a VIP ticket to a low competitive market. So you don't have to compete against 16 other people offering $100,000 more than the purchase price of what the seller put on there. Get in the house. You can refinance later. Just get in the house. Like I said, a higher rate environment is a VIP ticket to a low competitive market. You'll be able to get in the house, start building the equity, and then when the rates do come down, which they will because what goes up must come down, just refinance.
Yeah. Yeah, it's very interesting. Everybody that I talk to that actually is a real estate professional, whether it be agents or, lenders or anybody else that actually knows what they're talking about, it's always like the same message, right? It's like get into the house, right? Like you said, higher rates, lower competition, typically better deals on the house. Like focus on the price of the house and the deal you're getting on the house and not so much on the rate, because like you said, could always be refinanced, right? And it's
always be refinanced, absolutely. And of course, we're in real estate, and we understand that we all work on commission. So a lot of people are still going to say that, but I actually have data and I have analytics that I can actually back up my statement. I have all the software that can prove that to any individual that is questioning that.
Yeah,
sure. So the data doesn't lie.
Yeah, for sure. And then with you, where do you as far as your typical client, out of curiosity, are you mostly first-time home buyers? Are you move-up home buyers? Are you high-end luxury? How's your client mix looking let's say over the last 12 months, if you can even narrow that down?
I'm a mixed breed, man. We do $1 million properties. We do a lot of second homes.
Mm-hmm.
Obviously, because we're in Southwest Florida, so a lot of people buy second homes. We do down payment. I do down payment assistance programs for first-time home buyers, condos, condotels, sometimes manufactured homes. It really just kind of depends on the agent that I'm working with and the buyer and what they're looking for. We don't really turn away specific situations or scenarios. We write loans for basically anybody. So if it's the first-time home buyer that's having a little bit of trouble with their down payment, got you covered. If you're a seasoned investor and you want to buy an investment property, got you covered.
Yeah.
If you're sitting on a really good equity and you want to sell from Connecticut and want to buy down here in Florida because you're working remotely, do that too. Really there is no focus on what we do because we're so well versed and we can basically do a loan for anybody that can qualify.
Yeah. Yeah.
So it's a great question. I mean, but the short answer to the question would be, I don't care. I'll do a loan for anybody.
Yeah, for sure. Yeah, no, I mean, it's, obviously in my world, like with being real estate agent, there's people that focus on high-end luxury. There's people that kind of farm the condos. There's people that only do new construct, right? So
absolutely. So in the mortgage realm, it's a little bit different because we don't really focus. I mean, of course, everyone, like I said, we work on commission. So mortgage brokers get paid off of loan amounts. So obviously, we want a high loan amount, but we're not going to say no to the $125,000 loan amount. Those are the people that I actually enjoy working with the most. Those are usually your first time home buyers. That really puts me in the position to guide, coach, teach, and educate them through the process. Yeah. So when you're a client of mine, you're a client for life, man. Like I touch base, I hit you up and see how everything's going. And I see if there's anything that's changed in your life. Because you might want to make that primary residence an investment property and you might want to buy a new primary residence, right? Yeah. We do that all the time. So there is no shortage of things that we can do, and there's no shortage of buyers that we can't help.
Cool. Yeah. And so one question I also always ask like agents, and I'd love to hear from your perspective more on the financing sides, like what trends are you kind of seeing currently in Southwest Florida real estate, especially when it comes to financing, when we're looking at flood insurance, homeowners insurance, you see that everywhere in the news. Like what do you kind of see in trend wise, and where do you think the journey is going to go in regards to lending in Florida?
So lending in Florida, if you're not local in Florida, it's hard to be a lender in Florida. Like let's say you're in, Arkansas and you want to get your Florida license. Well, man, there's a lot of laws. There's a lot of stipulations. There's a lot of, if you've never done a condo in Florida, I mean, you hold on to your hat because condos are, condo HOAs, is their budget good? Is there reserves, delayed maintenance? So there's a lot of things with that. But trends I see in January 2025, as we're doing this recording, I see a lot of sellers now offering buyers a little bit more seller concessions to help with their closing costs, because a lot of people used to have adjustable rate mortgages and maybe their mortgages are due and now they're anticipating the rates going down, but they went up. So maybe they can't afford the home anymore. So they're motivated to sell. So I see a lot of seller concessions on my contracts that I see coming through. They just kind of redrew the flood lines in Collier and Lee County, which is primarily where I write my loans at. So knowing that beforehand is a big thing. A lot of current homeowners that are selling have existing flood policies that the new buyer can assume at that rate. That's very helpful. Mm-hmm. So if you're ever buying a house that's in a flood zone, and you got to ask the seller, hey, you got a flood policy that I can take on at that same rate, because flood insurance has increased. It's changed. Property values are steady. Every appraisal that I'm getting in is pretty much coming in at value and or more. I think 1 out of 10, the last loans I've done, one of them came in, a couple thousand lower. Right. So in regards to the prices being stable, as long as the real estate agent that's listing the property has set their expectations for their sellers, right? Right. And the buyers are understanding that this market is stable, and we're in Southwest Florida, man. We are really insulated from a lot of what the other part of the countries are doing, right? Like our market is so different than Colorado. Our market is so different than Iowa. Our market is so different than California. We're very insulated here. So that's why I always love being here. That's why I always tell people, man, the Florida lifestyle is real. I know it because I used to not live here, but now I do. Yeah. So that's my answer to that one.
Cool. Awesome, man. And then lastly, wrapping it up. So a couple minutes ago, you said kind of first-time home buyers is one of your favorite people to work with, just so you can like guide and educate and basically build that relationship, client for life kind of thing, right? Because first-time home buyer, they're probably going to have a move-up home, and they're probably going to have investment and this kind of stuff. So if you were to give one point of advice besides calling you, what is one advice you would give a first-time home buyer to prepare kind of for the mortgage process?
Set up a loan consultation with a mortgage lender. Doesn't matter. It can be me. Cool. Set up a loan consultation with a mortgage lender. They should be able to give you a pretty good idea of where you are and where you want to be at. They can give you a clear mortgage plan. Not every mortgage broker or lender is right for each client. So make sure the personality of that individual matches you. Make sure they have your best interest at heart. Make sure check their Google reviews. Check their reviews. It's very important what past clients say about the person you're about to trust with thousands and thousands of your dollars.
Yeah.
That is huge, I feel like. And get your paperwork in order prior to. If you're a W-2 salary employee, you don't have very much information to hand off to the mortgage broker. Right. You're going to need a few documents. The less stuff that you have, the less stuff you have to send in. The more stuff that you have, maybe an additional house, a business, that's when you really have to make sure that your income is there or not, because we have non-traditional lending options. But just make sure that you have a conversation, because if you think it's out of reach, it might not be.
Right. Awesome, man. Yeah, great advice. So yeah, man, I want to thank you for your time. I think we hit some great points. Thank you for your expertise. I really appreciate it. Of course, we'll link all your social media links down below in the descriptions. But if someone wants to get in touch with you directly, how can they do so, Vinny?
Cell phone number 239 area code 821-2951.
Awesome, man. Well, thanks again for your time, and
my pleasure, sir.
Go get him.
Yes, sir.
And that wraps up another insightful episode of the 239 Real Estate Roundtable podcast. I hope you enjoyed our discussions and gained valuable knowledge to enhance your home ownership journey here in Southwest Florida. A big thank you to our incredible guests, and of course to you, our listeners, for joining us. If you have any questions or topics you'd like us to cover, or if you'd like to connect, feel free to reach out. You can find us on Instagram at KevinTremmel_real estate, on Facebook at Kevin Tremmel Real Estate, or visit our website, kevintremmel.com. Don't forget to subscribe so you never miss an episode. Your feedback is crucial, and we're always eager to hear from you. Until next time, this is Kevin Tremmel, your host, signing off. See you on the next episode.